Welcome to The Explainer. Today we are unpacking a truly fascinating subject, the highly complex and honestly often fiercely debated legacy of Jerome Powell and how his tenure fundamentally reshaped the Federal Reserve. It's a story packed with historic crises, shifting mandates, and some pretty intense political standoffs. Okay, let's dive into this. Now, Powell's time as Fed chair rests on two incredibly distinct perspectives. On one hand, his critics will be very quick to point out that inflation went way up under his tenure, reaching heights we literally hadn't experienced in decades. But, right across the aisle, looking at the exact same timeline, his supporters argue that inflation actually went way down under his watch. And, miraculously, the U.S. economy just kept humming along without falling into a recession. To understand this completely paradoxical legacy, we really need to break it down. So, here is our roadmap. We're going to explore his unconventional background, surviving the COVID crash, the transitory inflation trap, expanding the Fed's focus, and finally, defying political pressure. Section 1. An unconventional Fed chair. To understand Powell, we have to look at his bipartisan origins. President Obama initially brought him to the Fed board, and then President Trump elevated him to Fed chair. But his tenure wasn't smooth sailing right out of the gate. If we look back to the late 2010s, the Fed had been steadily raising rates, but suddenly they just ran into a wall when it looked like the economy was starting to weaken. During this time, Powell really struggled with figuring out exactly where that Goldilocks interest rate level should be to keep the economy perfectly balanced. Now, what's really interesting about this slide is that it highlights a fundamental difference between Powell and his predecessors. He was essentially an economics layman. He just wasn't the traditional academically trained nerd economist, right? I mean, sure, he understood the system's mechanics from his time as a Fed governor, but this non-traditional background heavily shaped his much more pragmatic, kind of learn-as-you-go approach to the completely unprecedented crises that were just around the corner. Which brings us to Section 2, surviving the COVID crash. Just as Powell was really finding his footing, this sudden spread of the coronavirus brought incredibly severe economic risks that threatened to just completely derail activity, both here and abroad. Facing absolute catastrophe, the Fed wasted absolutely no time jumping right in. Powell's pandemic response was defined by decisive action, incredibly fast implementation, and highly aggressive measures. He was totally willing to make decisions that were politically unpopular simply because the situation demanded an immediate, massive intervention. And here we see the direct cause and effect result of those rapid policies. The U.S. experienced the deepest recession we've seen at least since the Great Depression. But simultaneously, and this is wild, because of that rapid response, it became the shortest recession on record. The economy essentially bounced right back out of that hole, and observers widely credit that remarkable turnaround to the fact that the Powell-led Fed jumped straight into the fire without hesitating. All right, moving to Section 3, the transitory inflation trap. Well, as we all know, every massive intervention has consequences down the line. Flash forward a couple of years from the COVID crash, and the Fed unexpectedly ran into a massive wall of inflation. To understand why they hit this wall, we actually have to look slightly backwards. Following the 2008 financial crisis, the persistent fear was actually that inflation would never reach a healthy 2%. To fight that ghost, Powell's Fed created a new framework, effectively saying, hey, it's okay to let inflation run a bit hot. So in this super ironic twist, by trying to avoid the old problem of low inflation, they accidentally fueled a completely new one, initially dismissing the sudden post-pandemic price spikes as merely transitory. And this created some massive tension in the financial world. The pressing question on everyone's mind was posed directly to Powell. How long does inflation have to run above your target before the Fed decides maybe it's not so transitory? Take a second to think about that dynamic. At what point does patience turn into a historic policy error? Well, Powell ultimately had to face the reality of the data. His response to that exact question marked the absolute pivot point of his entire tenure. He stated, "You're absolutely right, inflation has run well above 2% for long enough." That was it. That was the exact moment the Fed had to slam on the brakes, abandon that transitory label forever, and start aggressively fighting the very inflation they had previously tolerated. Section 4. Expanding the Fed's focus. Now, while navigating all these historic whiplash economic swings, Powell's leadership also saw the central bank step into some entirely new and highly debated territory. As part of their new framework, the central bank actually began taking on social and environmental considerations. Critics, however, strongly argue that this exact expansion, this institutional mission creep, is exactly what caused the Fed to take its eye off the primary ball of controlling inflation in the first place. And this brilliantly illustrates exactly what we mean. Under Powell, the Fed introduced a mindfulness of minority unemployment when weighing interest rate decisions. On top of that, he got the Fed involved in international agreements to discuss climate change and assess what climate risk means for the financial system. These were unprecedented moves for the institution, and financial observers are quick to note that these specific frameworks would likely be fully walked back under future, strictly traditional leadership, like, say, a potential Kevin Warsh-led Fed. Which brings us to our final chapter, Section 5, Defying Political Pressure. Beyond the economics, beyond the expanded mandates, Powell's legacy is deeply defined by a massive power struggle between the central bank and the executive branch of the government. While the Federal Reserve is designed to be totally independent, historical precedent and political norms usually suggest that the Fed chair just quietly steps aside if the president pressures them to. But Powell, he pushed back against the executive branch in a way that almost nobody else ever has. When faced with intense political pressure and ongoing investigations, he completely defied the expectation that he would just pack up his desk. In response to criticisms that remaining on the board was some sort of political act, Powell delivered what is essentially a central banking mic drop. He stated, "I've said that I will not leave the board until this investigation is well and truly over, with transparency and finality, and I stand by that." Boom. He made it crystal clear he had long planned to retire, but was staying strictly because of the actions taken against him, cementing his stance as a fierce, fierce defender of the Fed's independence. So, looking back at the entirety of this incredibly complex, turbulent tenure, what is the core lesson here? Well, as former Fed Governor Kevin Warsh pointed out, it really comes down to humility. It requires not being too doctrinaire or dogmatic about your policy because, let's face it, economic reality will inevitably change. Powell's time shows us that if you rigidly stick to just one academic theory or framework, reality is eventually going to come along and force you to change your mind. Which leaves us with this final, critical thought for you to ponder today. Will future Fed chairs learn to be humble before the unpredictable fates of the economy? Or are we doomed to just repeat the same dogmatic mistakes of the past? It's a massive question, and it's one that will absolutely define the stability of our financial future. Thank you so much for joining me on this explainer. I really hope this helped clear up some of the incredible complexities of the modern Federal Reserve. Keep questioning, keep learning, and I will see you in the next one.